Now we look at the dramatic fall in Chinese demand for gold. The country's demand is cracking under the weight of record high prices.
The World Gold Council says that purchases in the first half of this year were the highest on record. The biggest buyers, the People's Bank of China, Turkey, India.
Whoever holds the gold makes the rules. This golden rule ideology has recently been gaining traction among the Chinese and Russians. Gold has long been recognized as a symbol of wealth and a financial safe haven in times of economic and geopolitical uncertainty. So, since the 2008 financial crisis, both countries have been in a rush to fill their coffers with gold as fast as possible. We are aware of currency wars, but we are much less familiar with the gold wars between East and West, and especially between China and the United States. In recent years, the lure of the precious metal has increased due to global instabilities such as trade wars, the conflict in Ukraine, and growing tensions around Taiwan. United States gold stocks stand at 8,133 tons, and the United States sits in first place as the world's largest gold holder. China's official gold stocks now stand at 2,280 tons, accounting for 5.5% of its total foreign exchange reserves, a record high. China ranks 6th in the World Gold Reserves ranking. The strained relations between the world's two largest economies heralds the approach of a gold war. Donald Trump's tariffs on China were the igniter of tensions between the two sides. In response, China announced a comprehensive package of economic measures targeting the United States. These moves were the clearest indication that the swords were drawn between the parties. In addition to the package of measures, the Beijing government also updated its gold stocks, clearly intimidating the United States. So why did China choose to turn to gold? What could China's move mean for the United States? For answers to our questions and more, our video begins. Global markets are on edge as trade tensions between the United States and China escalate, prompting investors to turn to safe haven assets. Gold has long been seen as a hedge against economic uncertainty. Unlike money, which can fall in value due to inflation or overprinting, gold tends to hold its value over time because it is a scarce resource used for tangible things. It can also be used universally, unlike country-specific currencies. The yellow metal rose to a record high as fresh tariffs from Washington and retaliatory measures from Beijing deepened fears of a protracted trade war. Trump's tariff announcements spurred spot gold. Spot gold rose 0.8% to $2,818.99 an ounce. United States gold futures touched $2,830.49. Ross Norman, an independent metals analyst based in London, said that, "I think it shows that they feel the trade war has legs to go on, and they're worried about how it might play out. Global macroeconomic data, geopolitical risks, and political developments, especially the ongoing trade talks between the United States and China, are expected to play an important role in the pricing of gold, which is seen as a safe haven by investors after the steps taken by central banks." Beijing wants more gold in its reserves. China has returned to accumulating gold ahead of an uncertain time for its economy in Trump's second term. It has increased its gold reserves due to economic difficulties and the strengthening of the United States dollar. Goldman Sachs estimates that gold could reach $3,000 an ounce by the second quarter of 2026 amid central bank demand. China's central bank added 330,000 ounces of gold to its reserves in the second month of the expansion of its gold stash. As of December, China held 73.29 million ounces of gold, up from 72.96 million in November. China's increase in gold reserves came after a 6-month hiatus in which the world's second-largest economy pulled back buying amid record gold prices. Gold started 2025 with fresh strength after its strongest annual performance since 2010 last year, hitting an all-time high of $2,849.05 an ounce, driven by United States-China trade wars. As gold prices rise, China's investment strategies attract attention. The Chinese yuan has also depreciated against the dollar over the past year and is at a 16-month low. Ray Jia, head of China research at the World Gold Council, wrote that he expects investment demand for gold to be supported this year due to potential losses in the yuan and the prospect of lower interest rates, coupled with investment momentum and increased futures trading, contributing positively to the stunning performance of the Chinese gold price. Moreover, the recent discovery of a huge gold deposit in the Huanggu region of China's Hunan province is of great importance for the global gold market. It is described as one of the largest deposits to date, with an estimated quantity of up to 1,100 metric tons of high-grade gold ore, valued at around United States $83 billion. The implication of such a find not only solidifies China's position as the world's largest gold producer, but also has huge implications for the global economy, geopolitics, and resource management. To fully appreciate this discovery, it is necessary to explore its scale, context, and potential impact for various sectors. The Huanggu gold deposit hosts an incredible network of 40 different veins that extend from the surface to a depth of 2,000 meters. While initial exploration was able to uncover 330 metric tons of gold, further scientific modeling and deeper exploration could find another 770 metric tons buried under another kilometer of soil. The high concentration of gold in the ore, measured at 138 grams per ton, makes this field remarkably productive compared to global averages. This discovery not only eclipses the reserves of South Africa's South Deep mine, previously considered the second largest gold deposit at 1,025 metric tons. It also stands as a testament to China's geological exploration capabilities and advanced mining technologies. As the world's largest producer and consumer of gold, China is in an enviable position to take full advantage of the Huanggu deposit. In 2023, it produced around 370 metric tons of gold, accounting for 10% of global production. While this sounds impressive, it still consumes far more than that in a year. As a result, China has relied heavily on imports from countries like Australia and South Africa to cover its deficit. Moreover, China's central bank has actively built up reserves, buying as much as 225 metric tons of gold in 2023 alone. While the Huanggu discovery will not completely offset China's imports, it will greatly reduce the deficit and provide temporary relief to its voracious appetite for the precious metal. The effects of the discovery extend far beyond domestic consumption. On a global level, the announcement sent the price of gold soaring, causing volatility in mining and financial stocks. With such a windfall, China could increase its economic sovereignty, boost its foreign exchange reserves, and reduce its dependence on the United States dollar. All this is in line with Beijing's long-term approach. Beijing's approach is to reshape the global financial architecture and position the yuan as a viable alternative to the dollar in international trade. So will gold become a thorn in the United States' side? Some commentators have been predicting for decades that the United States dollar's special status as the world's international reserve currency will end in the near future. They will finally be right, and that day may be much closer. As usual, China may hold the key. Historically, the dollar has been the preferred reserve currency because of some distinct advantages over potential alternatives. For a start, the United States has a strong institutional framework with well-established rules and many constitutional checks and balances. This makes it a relatively predictable and safe place to invest. Moreover, the enormous size of the United States economy and the depth of its financial markets have created a large pool of relatively liquid assets that are ideally suited as a global store of value. Indeed, many countries around the world try to peg their currencies against the United States dollar at fixed pegged rates or some form of managed exchange rate. The so-called dollar zone is therefore even bigger than the United States itself. It also helps that a large part of global trade still takes place in dollars. Prices of key commodities such as oil, metals, and grains are priced in United States currency, and the dollar is accepted as a means of payment almost everywhere in the world. Yet cracks are beginning to appear. A growing trend is for central banks to reduce the share of their foreign exchange reserves held in United States assets and to gradually diversify. According to International Monetary Fund data, this ratio fell from 71% in 1999 to 59% at the end of 2020, the lowest level in 25 years. Since then, the downward trend has paused, but recent data has been positively influenced by the strength of the dollar, with the United States economy performing well and the Fed keeping interest rates high. This in turn reduced the dollar value of reserves held in other currencies. But below the surface, diversification away from United States assets has continued. As part of this trend, central banks have been adding to their gold holdings. The People's Bank of China, PBOC, is at the forefront of this, with official data showing that March was the 17th consecutive month of net buying. Industry insiders also suspect a large amount of secret buying by the authorities. This is not necessarily malicious. It could just be that the PBOC is a shrewd investor, capitalizing on gold's traditional appeal as a safe haven, a hedge against inflation, and a way to diversify risk. The Chinese authorities may very well have capitalized on an emerging market. It is also worth noting that Chinese private citizens have also enjoyed buying gold as a way to circumvent the country's strict capital controls, at a time when domestic equity and real estate markets have been underperforming. In other words, as China grows its gold reserves, it could move closer to creating an alternative reserve system to the dollar. Will this jeopardize United States financial supremacy in the long run? Some experts say yes, it is a plan of destruction, while others say it is not that easy because the world is still dependent on the dollar. But China is not alone. According to the latest official data, Turkey actually bought more gold than China in the first 3 months of this year. India is not far behind. But there may be more to this story. China's diversification away from United States assets has clear strategic advantages, largely given rising geopolitical tensions over Taiwan and Beijing's growing assertiveness in the South China Sea. The shift to gold has helped China create a safe war fund from United States sanctions. Russia has already taken this step, and other states may follow. China's gold stockpiling could also be a warning that the country could use its large holdings of United States government bonds as a weapon. Any threat to sell these bonds could raise the cost of borrowing, not only in the United States but also in the rest of the Western world. On top of that, the United States could become its own worst enemy. The recent strength of the economy and markets partly reflects a massive fiscal stimulus initiated under President Trump and continued under President Biden. This is something that only a country that issues bonds in the world's dominant reserve currency can do, but we should not forget the patience of international investors. Traditional trust in United States institutions and policymaking is also at risk. Both countries are expected to be dragged into a protectionist trade war, and tensions with China are expected to escalate further. This could take many different forms. It may be possible that the dominance of the United States dollar continues to erode, but this takes the form of a gradual rebalancing towards other Western currencies, including the euro and the Australian and Canadian dollars. The Japanese yen now looks remarkably cheap. Bond yields are finally starting to rise to levels that can attract international buyers. Even sterling accounts for a larger share of global foreign exchange reserves. The pool of investable assets in China is still small. The prospect of a coordinated response by United States allies to a new threat from China, as they did to Russia's invasion of Ukraine, also limits the ability to avoid sanctions by moving away from the dollar. The gold market is not big enough to absorb all the capital China has parked overseas. But in a worst-case scenario, a sharp fall in the value of the dollar could have significant negative effects elsewhere in the West. This could be reflected in higher interest rates in the UK and the rest of Europe. On the other hand, the discovery of the Wangu deposit also reveals the broader context of global gold reserves. Statista puts the current estimated reserves not yet mined from Australia at 12,000 metric tons, with Russia in second place at 11,000 metric tons. Third was South Africa, which came in third place with 5,000 metric tons of reserves, although relatively insignificant in terms of its role in once dominating gold production worldwide. The Wangu deposit is important, but it is also an element in the extremely lopsided distribution of natural resources around the world. This imbalance often fuels geopolitical rivalries, as nations vie for control over these critical assets. Gold's importance extends beyond its monetary and geopolitical value. For centuries, it has symbolized wealth, power, and cultural heritage. In China, gold has deep cultural significance, playing a central role in traditions, weddings, and festivals such as the Lunar New Year. Its universal appeal has made it indispensable in industries from luxury goods to technology. As an excellent conductor with great resistance to corrosion, gold finds applications in electronics, medical devices, and even in space. As innovation in industries evolves, the demand for this metal will always grow, giving importance to discoveries like Wangu. From a historical perspective, the total amount of gold mined by humanity is surprisingly limited. According to the World Gold Council, by the end of 2023, about 234,332 metric tons of gold had been mined throughout history. If all this gold were put into a single cube, it would be only 22 meters in diameter. That's a little less than the length of a blue whale. This striking image emphasizes how rare gold is and that it has enduring value, even in these times of advanced technologies for mining. The Wangu deposit is therefore not just an economic boon for China. It is a symbol of its growing influence in the global gold market and a reflection of the broader trends shaping the industry. As the world grapples with the challenges of resource scarcity, environmental sustainability, and economic instability, discoveries like Wangu serve as opportunities and reminders of the finite nature of Earth's treasures. For China, the challenge is to use this new wealth responsibly, balancing short-term gains with long-term stewardship. The discovery of the Wangu gold deposit is a milestone with far-reaching implications for China and the world. Economically, it gives China a more solid position in gold production and consumption globally. Geopolitically, it is an excellent asset for navigating a volatile international environment. From an environmental perspective, the challenges require careful management and innovation. As the appetite for gold continues to grow globally, the Wangu deposit stands as a testament to its enduring appeal and importance in the modern world. In its shimmering depths lies not only the promise of prosperity, but also the responsibility to use the Earth's resources wisely and fairly for future generations. So what do you think about this subject? We would be grateful if you could tell us in the comments. Thank you for watching us. Do not forget to subscribe to our channel, turn on notifications, and like to support us.